Welcome back to SuperPrime UK. Thanks for tuning in. Welcome back, James. How have you been?
Yeah, no, really good. Thanks, Rob. How about yourself?
Yeah, all good. Both of us travelling back here in London now and ready to kick things off.
Yeah, no, thanks, Rob. Let's start off with a bit of data for London and what's been happening. So I think it's been a pretty strong month here in London in terms of new instructions coming to the market. It's been averaging about 525 per week. So really strong data there. In terms of the transaction volumes, the number of sold properties, we're averaging about 63 per week for the last month, which isn't particularly strong data, but I think as we're coming through some of the supply shortages, I think that is the main encouraging point at the moment. A couple of other things to focus on. I think there's been a little bit of a shift in how properties are marketed. There was 913 properties withdrawn just after Easter in London, so a big volume there, and a number of those have been just stagnant properties that are probably slightly overpriced and have been on the market for some time. And just this week alone in London, there's been 388 price reductions. So I think there's maybe a bit of added motivation in the market from sellers, coupled with some of the better sentiment in terms of on the buy side, the mortgage rates, which we'll come on to, and a slightly improved buyer sentiment in the market.
Yeah, I think the data is giving us really clear messages. I've been out on the streets speaking to all of the agents, finding out what is really happening out there for you. And the trends are pretty clear. 6 weeks now of 500 plus properties week on week, which means that the stock and supply is coming to the market. The challenge is buyers and obviously pricing. And I think that's really interesting. To have the highest amount of stock coming on stream for quite a few years is a key indicator of where we are in the market. And now to have the highest level of price reductions for a year, I think that's also really interesting, and that goes in line with the stock that's come on stream. So now the challenge is buyers, and the biggest thing that impacts buyers is affordability and what the mortgage market is doing.
Yeah, thanks, Rob. And then just in terms of what trophy assets have been trading, over the last month, the sort of average weekly sort of highest price has been in the region of about 10 million. We've seen sales in Chelsea, actually Belgravia as well. And the last month, the biggest sale we've seen is a Notting Hill Garden Square, around 23 million. So that market continuing to perform very strongly.
Yeah, SuperPrime Prime is consistently performing, not the levels previously seen, but at a consistent level. The challenge in that space is buyers. At the bottom end of the market, there are more buyers and more volume, and that's where the transactions are coming from. So it's all about understanding at what point people get comfortable to cross that line. We've seen the trend that a lot of prime, super prime properties are now being rented, and the Americans are using this try before you buy, because they just want to see, what's the political position in the US going to be, maybe over the next 2 or 3 years, and also what's it going to be here in the UK, and what is going to be the ongoing non-dom position. So try before you buy, wait and see policy for many ultra high net worths, and I think that holding position is going to be a trend.
Thanks, Rob. And then in terms of the UK economy, we've had some very positive news and some, slightly more tricky news in terms of inflation in the last week or so. Let's start with inflation. We're up to 3.5% now. So obviously a steep rise on the last month, where we were previously around 2.6, and it's currently the highest level since February 24. They're saying that the increase is due to household bills, higher food prices, vehicle duty, and airfare costs. I think a lot of people away for Easter and things maybe sort of driving up the price and included in that basket of goods. Yeah. And the same factors are expected to keep inflation above 3% for the next few months.
I wonder at what stage, based on the excellent weather we've seen and the very mild spring conditions, could that have a positive impact in maybe quarter 3 on household bills, especially from a heating perspective, may be helping to calm down those inflationary figures?
Yeah, it did have an impact last year in terms of a slightly milder winter on the heating and fuel costs. So that did actually get factored into the inflation over the winter months. And obviously, I think, like you said there, staycation bookers may be starting to lock in for those that maybe summer and late summer months in some of the British seaside towns. The Bank of England did, on their commentary for inflation last month, did say they anticipated a rise in inflation and expects it to peak around 3.7% between the months of July and September before slowly falling again. So I don't think it's a huge issue, which is a surprise to the Bank of England and the Monetary Policy Committee. So although it's a bit of a shock on where we were on the previous month for inflation, I think it's something that was anticipated by the Bank of England, and in terms of their decisions, which we're just going to touch on as well, Rob. So very welcome news for the property market in terms of the interest rate fall down to 4.25% just at the start of the month. Which at that same time, they did give some indications that there'd be further rate cuts to follow in the coming months. So we'll see what happens there. We've had sort of every other MPC meeting, we've seemed to have had a rate cut there. And the latest reduction marks the fourth cut we've had in the past year. You know, in terms of where they are now, Bank of England, they might want to, I'm sure it crossed a lot of people's minds within that. Should it have been a bigger rate cut, or because it was overwhelmingly voted for the quarter point reduction. But in terms of the concerns over the global trade war, how that might influence the UK and the economy here.
Yeah, I think we talked about this in the last show, and now the markets are betting on a further 1 to 2 quarter point reductions in 2025. I believe that we will end up at around 3.75% by year end, and broadly that's what the markets are indicating. Could be a bit higher, could even be a bit lower, but the middle point is that, and ultimately that should have an impact on the mortgage market. So where are we with that?
In terms of where we are, the 5-year and the 2-year fix seem to be slightly aligning as the base rate has fallen, Rob. So I think Nationwide seems to have some of the most competitive products out there at the moment, with there being very limited differential between the 2-year and the 5-year fix. But 3.89% is what they're offering. A number of other mortgage providers between there and 4%, just over 4%, just depending on where you are in terms of your LTV and the product arrangement fees as well having a bearing. Rob, just staying on the topic of the base rate, we had Hugh Pill doing an interview this week just in terms of his views on the current base rate. And his particular opinion was that we're cutting the base rate slightly too fast. He was one of 2 members of the 9-person panel on the Monetary Policy Committee, which voted for a no change on the base rate. And just gauging their sentiment, there was 7 votes out of the 9 in favour of the quarter point cut, whilst there was 2 members which were in favour of a larger half a point cut. So I think what you're saying there, Rob, in terms of where we are, I think on some of the sentiment and the views within MPC gives us in terms of quite a good balance on where they are, where the views are, where they've settled. So like we said earlier, I don't think the inflation spike is going to be a huge fright to the committee there. And hopefully we continue to see another 2 cuts this year in the base rate. And hopefully we're ending up at that 3.75 figure to strengthen further the residential market.
Yeah, I think you just have to look at what they're doing in the European Central Bank. Another reduction recently to 2.5%. And I think they have to keep on going in the direction they're going to fuel the market, affordability and movement. So I've had a good chance to speak to, as well as all the agents in the market who have stock now and are struggling with buyers, and they're struggling with buyers from affordability is one of the main reasons. So having spoken to all the lenders, mainly the retail lenders in the market, they are performing better than last year. So broadly up 10-15% more lending is taking place, predominantly in refinance, but still also purchases. And the reality is that we're a quarter to half a point away from reaching what I would call a tipping point in the mortgage market. So the second you've got a product out there between 3.5 and 3.75 is where you're going to really attract the volume to come back to the market to make a change. And that's going to allow for there to be activity both from a purchase position and a refinance. So the second you get to 3.5, 3.75, look out for that. That's going to be the tipping point. And I believe we're 1 quarter or a quarter point reduction in interest rates or a quarter point reduction in the mortgage rates. We're nearly there. We're possibly, 2, 3, 4 months away. So I think everyone's anticipating or looking forward to that. And what will happen with that is that it will allow buyers to come in and buyers to sell because of affordability purchasing. So up the chain and down the chain, we're going to have functionality in a moving market. And I think that will be really positive for the second part of 2025, leading into a better 2026.
Yeah. And just some further residential news to finish. The regeneration of the Earls Court Exhibition Centre could be showing some signs of activity, with possible detailed planning looking to be submitted towards the summer. It's been an ongoing master plan area since it gained outline planning approval in 2013 for almost 6,000 new homes alongside public realm, shops, offices, leisure facilities. There's been a hive of activity there. The exhibition centre got demolished in 2015. The site was then repurchased for 425 million in 2019. So I think that would be a really great master plan area if that can obtain its detailed planning and come back online in terms of construction. It's going to be very topical in terms of delivery of new homes. I think in terms of a central London regeneration scheme, it's going to align to that sort of it's not going to be as large as Battersea, but I think if you take King's Cross, Granary Square, and what a lot of the developers looking to do around Euston, it's going to align to another central London master plan regeneration.
Yeah, absolutely. Looking forward to that. It's a needed scheme. It's in a great location. And will be a great addition to the London market. So sooner the better.
Absolutely.
Thanks for your insight, James, as always, and we'll be seeing you all again soon on SuperPrime UK. Thanks for joining.
Thanks, Rob. Thanks very much, everyone.